See everybody again. Yeah, as Phil just mentioned, I'm Gerald Gallagher from Crypto in America. I'm joined by Jung from Lantern Finance. So let's dive straight into it. So Jung, what does Lantern Finance do?
Yeah, we're first of all, very honored to be here. So we are a U.S.-based crypto-backed lender. We lend against a variety of assets, but XRP is one of our most popular ones. So very happy to be here. If anyone, it's mostly for like long-term investors who hold XRP and other crypto assets, and they don't want to sell, they don't want to trigger capital gains taxes prematurely, but they want liquidity for whatever reason. They will come to us, and we're here to help with that. Yeah.
So let's go again, just straight into it. We're going to tackle a painful subject that may be a bit of the origin story here. So you've been in crypto for quite a while.
Right.
You lost money in BlockFi after they moved client assets to FTX. Walk us through that experience, and what did it feel like, and at what point did you decide, I'm going to build the thing that should have existed?
Yeah, that's a painful memory, but so just to give a quick background on myself, I come from traditional finance. So I started off my career at Capital One and then Silicon Valley Bank doing leverage lending. So I know finance, right? I've been in this space for a while. But I entered crypto, just on a personal level in 2016. And at the time, I was scared to do anything with my assets, right? I wasn't comfortable with self-custody, because what if I lose my keys? At the time, they were like ICO boom, DeFi summer. Like I didn't touch any of those because you hear about scams and hacks all the time. So I just held all my assets on centralized exchanges. But come 2019, I heard about this company called BlockFi. How many of you guys have heard of BlockFi or Celsius, Voyager? Yeah, so not a lot, but for those of you guys who don't know, they were the first iteration of crypto lenders. They would offer yield on their crypto, as well as let you borrow dollars against it, which is what we do today. So when I heard about them, I was a big fan, which was a mistake in hindsight, because fast forward 2022, they, along with the entire industry, the crypto lending industry, just blew up, right? FTX blew up. It actually started with the fall of Terra Luna, which caused a large hedge fund in the space, Three Arrows Capital, to blow up. And they had a lot of loans from the BlockFis of the world. And what happened was I had a big loan out with BlockFi. And what they were doing was they were taking borrower collateral, the crypto, and instead of keeping them in like cold storage or just leaving it be, they were lending client assets to bad actors like Three Arrows Capital and other funds on an under-collateralized or even unsecured basis, which is crazy. You don't do that in finance, right? They were also speculating on DeFi yield farming strategies, just things that you shouldn't have been doing with other people's money. So when they blew up, I got with my now co-founder, his name is Prince Jindal. He's also from TradFi. He started his career at Blackstone, had his own crypto credit fund. He got burned by Genesis. And so we got together, we did a post-mortem on what just happened in the industry, and we wanted to build something secure and safer in the crypto credit space, so that there would be no reason for anyone like us to, so that no one has to go through what we went through, basically, right? So that's what Lantern is today. We lend dollars against your crypto. All the crypto assets sit in cold storage with a qualified custodian. We use BitGo, which they recently went public on the New York Stock Exchange. They're massive. All the funds are insured up to $250 million. We don't trade it. We don't, invest it. We don't do anything with it. It just sits in cold storage. So.
Yeah, I want to go back to that moment in time, because I think it was a really difficult phase of the industry. Coming from traditional finance, traditional sort of collateralized lending, and then segregation of assets, as you mentioned, what do you think went so wrong, in that phase? How did we get there?
Yeah, I would say greed, frankly. So this happened before in recent memory in the TradFi space, right? Like the 2008 subprime mortgage crisis. The reason why banks failed at the time and had to get bailouts was because, and the reason why Bitcoin was even created was because these banks, they were making money on the loans to like mortgages, right? They're earning interest, they're earning origination fees and all that stuff, but they're also double dipping and making money on the actual the mortgage-backed securities, because they would repackage things and sell it off to other banks, to each other, and that's when things went really wrong, right? Rehypothecation of these assets. BlockFi, Celsius, Voyager, these, again, the first iteration of these lenders were doing the same thing. They were making money on the interest for loans to retail and institutions. But on the back end, they were also double dipping and making money lending out the collateral, the crypto collateral, to other institutions on an under collateralized basis. So it's just something that we all saw happen just like a decade ago, right? But yeah, I guess some people don't learn.
Short memories sometimes.
Right.
Yeah. Well, so let's fast forward to now to more positive times. Yeah. So you have called yourselves at Lantern an OG altcoin lender.
Yes.
Focusing on XRP, Litecoin, Dogecoin. We see a lot of lending tied to Bitcoin and Ethereum. Right. What made you guys so interested in XRP and others as an asset class?
It's a great question. So we started business little over 3 years ago now, March of 2023. When we first started, frankly, we also just started with Ethereum, Bitcoin, Ethereum, and Solana. Those are just the most institutionally recognized ones, at least to date, right? But fast forward, a year into it, we were getting inquiries from people wanting to borrow against XRP, Litecoin, and some of the other assets you mentioned. And we realized that a lot of these assets, they're actually more robust than some of the other more popular layer one cryptocurrencies because they've been through multiple cycles. Like XRP has, it's like one of the oldest, right? I think Bitcoin, XRP, and then maybe ETH. I forgot the exact order, but it's been around. It's survived not just market cycles, but the U.S. government. The SEC went after them. It's obviously resolved now. And it's just a robust asset. It's now the top 3 by market cap in the market, and they just have XRP investors have nowhere to go, right? Because it's not natively it's not like Ethereum where there's got robust DeFi ecosystem. That's not what it was created for initially. It's like supposed to be a global payments rail, right? So there's no way to access loans on DeFi for XRP, but also for a lot of centralized lenders, it's not mainstream enough, or maybe because of the SEC lawsuit, maybe they were afraid to touch it. But for us, we saw an opportunity there and a gap in the market that we could fill, right? And so that's kind of what led us to explore XRP. And once we added support for it, it just quickly became one of our most popular assets. It's just been incredible.
Yeah. So just tying back to the title of the panel, right? I'm at a poker table. Right. I walk in. I've got my bag of XRP. I want to do something with it. I want to get into the game here. What exactly happens when I go start to work with Lantern? Yeah, so when you're at a poker table, you need chips, which you need dollars for, so you can borrow against it to get your chips. But in practically speaking, let's say you want to borrow against your XRP. You go to our website, lantern.finance. Everything is just web-based, web app. It's very simple. Just email, password to create your account. You design your loan. So you pick XRP, how much in dollars you want to borrow. We calculate how much collateral you need for that, like the number of XRP units. We also give you a summary of terms, like what the rate is, what your monthly payments will be, what the key levels to watch out for is in terms of loan-to-value ratios. If you're a new client, obviously KYC, KYB, because we are regulated, we need to collect that. Nothing more than what's needed. Then you review the loan agreement, sign it there. And then last step is we give you our BitGo XRP address and your destination tag that you just copy and paste from wherever you're sending the funds to. Click submit, you're done. It takes maybe 5-10 minutes. And we fund same day as fast as 10 minutes, depending on how you want your funds. Yeah, and so we were having a conversation backstage about this a little bit, just in terms of what XRP holders are looking for in terms of deploying those assets. Getting yield, it's not a proof of stake network, so there's not sort of passive staking yield. Why would I want to borrow against my XRP, and what are some of the things that you can kind of put together for me? It's a great question. So effectively, our loans are personal loans, so it can be used for anything, right? But from our existing client base, what we're seeing is, I would say 40 to 50% of folks are just so bullish on XRP and this crypto that they borrow to buy more crypto. I'm not it's not my place to say if that's the safest way to use loans or not, but to each their own. But I would say another large portion borrow to diversify their investments, whether it's in real estate, to start a new business, whether it's to fund working capital for your businesses, and another portion, I guess, use it to fund big purchases or expenditures. Yeah, basically
because what we're effectively selling is we're selling dollars, we're selling cash and liquidity. So every time you need liquidity, but you don't want to touch your XRP because you think that you're obviously investors in it because you think there's upside potential. You think it's going to appreciate in the future. You think there'll be more adoption. So why sell and trigger capital gains taxes when you can instead borrow?
Yeah, and on that note, I think you talked about the historical, I guess, issues that people have with trust in this space.
Right.
You know, you mentioned being a regulated entity, having KYC, KYB. What is important to your customers about the transparency of your platform, and like how do you deal with that when I'm giving my collateral to you and putting it out there in the world?
Yeah, I mean, it's very important, right? I mean, like even as from the standpoint of a client, right? Like I'm a client of my own company, right? I also use Lantern. I've been burned by BlockFi and Celsius. So have many others in this, you know, just even in this room, right? And so I think people need to be certain that, because like, sure, you could borrow against your crypto, but if the platform is doing something shady, you lose all of it. So you have to be very careful who you work with, right? That's why for us, you know, transparency is kind of key. It's very, you know, key to what we do. Whenever you basically send your assets into the wallet address that I mentioned earlier in the process, you copy and paste and you send it right to your destination tag. That wallet is a BitGo wallet, and it's a public, it's blockchain. You could go to like XRP Scan or some other block explorer, paste it in, and you can see the funds there, right? Like we might move it around for like, you know, like collateral management purposes, but it's all within BitGo. It's in cold storage, it's not in any hot wallet, it's not going to any other third parties, it's just there, right? And also, I think a key part of transparency is communication. A lot of crypto companies, there's no customer support, right? I'm not gonna name any names, but like, if you run into an issue with like a crypto company, you're kind of screwed, right? It's like a chatbot or like automated, you know, emails, and it's very hard to get a hold of someone. For us, we have real phone support. You could call it, you could text it. You'll always get a real human. Sometimes it might be me. Sometimes it might be one of my colleagues in the booth. Some people who couldn't make it today. But you know, we walk you through things. We answer questions. We take the time to really understand our clients and their needs and their concerns, and that's at the heart of what we do.
Yeah, and so just to contrast that, you know, with the DeFi world, right? Like I can't exactly call customer support, you know, at the protocol level,
right.
Unfortunately. What do you think about like others, and yeah, we don't have to be specific, but other sort of centralized lending mechanisms, and then DeFi, and like what kind of advantages you can put together there?
Yeah, so there's two layers, right? One is DeFi versus DeFi. So we're centralized finance, DeFi versus decentralized finance. So with DeFi, there's a lot of trade-offs, pros and cons, right? DeFi typically rates are better, right? Because there's no middleman, like, you know, there's no fixed cost that we might have, right? And it's an open market. The only issue is, yeah, there's no customer support. It's typically for XRP, you have to wrap your XRP to do it, which in certain jurisdictions might be considered a taxable event. I know it's up for debate, it's a gray area. But also, everything is open source. It's all smart contracts. If there's a smart contract exploit, like what happened with the Kelp DAO and the Aave thing, if you guys, you know, Aave is one of the, the OG of the DeFi space, right? They kind of helped create it. Even they were impacted by, I mean, it wasn't their fault because it was like another bridge that was hacked, but they're still impacted, right? In centralized setups, that's not really a concern because everything is closed source. Again, we use cold storage with BitGo. It's not on any hot wallets, right? So, it's, you know, sure, you can get cheaper rates, but if you lose your collateral, then that's what's the point, right? In terms of other CeFi lenders, I would say, obviously I'm biased, but I would say we have some of the most borrower-friendly terms. Again, same-day funding, real customer support, but most importantly, the biggest risk that you guys should be aware of if you guys ever want to take advantage of crypto-backed loans is liquidation risk. Again, you borrow against your XRP because you don't want to sell it or you don't want to lose it. But what happens when you borrow against your crypto or XRP is if the price falls down, there's a concept of a loan-to-value ratio. So it's the value of the loan divided by the dollar value of the XRP. So if the value of XRP goes down, the loan-to-value ratio goes up, which is a bad thing. We lend up to 40% loan-to-value initially. So let's say you have 100K worth of XRP, we'll lend you 40K. If the price of XRP goes down enough and the loan-to-value ratio hits 65%, we issue what is called a margin call. There's no action there. It's just we just give you a warning. Hey, you might want to take a look at your loan. You might want to add more collateral or pay down your loan a little bit. Just take a look, right? If it goes on further and it hits 75%, that's called like a liquidation, right? Like so, at that point, we have to sell your collateral to cover the loan and then send the remaining amount back to you. But a lot of DeFi protocols, this is another thing, is they automatically liquidate you at a certain price. It's just gone. There's no grace period. It's just, it's a trigger. A lot of centralized lenders, some of them have like grace periods here and there, but we give 72 hours, 3 days for you to address the margin call before any liquidation happens, even if the price just suddenly crashes. We call that flash crash protection. So if you guys remember on October 10th, there was a sudden dip in the market. Not a single one of Lantern clients were impacted by that because of our grace period policy.
Yeah, no, that makes a lot of sense. I want to shift a little bit just into the amount of liquidity that's coming into the space. I know everybody here is interested in tokenization and ETFs, and the suits are coming. It's been a really common theme for crypto kind of in the last year. The SEC, CFTC joint guidance released in March firmly classified XRP as a digital commodity. This number is probably going to be a little stale, but I think since the end of last year, we've seen over 1.4 billion flow into ETFs in this space. Probably adds a lot more liquidity, a lot more holders. How does that impact the lending business for you guys, or how you think about what you're able to do?
Yeah, so for us, I mean, we already support XRP. We're part of the ecosystem. So nothing changes on that front. It helps a lot in the sense of with institutional inflows. To your point, liquidity gets a lot better, right? Like, I mean, I don't know the numbers, but like there's Evernorth now. There's a lot of like XRP-specific, digital asset treasuries or DATs that are bringing in, like Wall Street traditional finance capital into the ecosystem. And the more XRP is accepted by institutions and is an investable class, the more liquidity that flows in, the better that we have. This sucks, but basically, like, we also offer loans against like Bitcoin, right? But our Bitcoin-backed loan rates are a little bit lower than that of XRP-backed loans. It's not because we like Bitcoin more or anything like that. It's because of our own cost of capital. We also borrow money from institutional lenders to fund our loans, and we make a spread. That's our business model. But as liquidity and adoption grows within institutions for XRP, that's going to help us also lower our own cost of capital for XRP-backed loans, and we could pass it on to our clients who can also get cheaper financing with us. Yeah,
I want to move forward a little bit because I know we're getting short on time. So the XRPL native lending protocol is working through validator voting to bring DeFi lending directly on Ledger. How do you think about whether that's competitive or complementary to what you guys are doing?
I will say it's complementary from an industry level in the sense that it's like two different groups of clients that we're targeting, right? For borrowers who are comfortable with like the DeFi version of Ripple's like borrowing and lending protocols, by all means, right? It's another option for you. But again, there's that. I mean, I don't know how Ripple is going to do it, but I'm assuming there would have to be some auto liquidation, to protect the capital pools that are lending to these borrowers. I'm assuming customer support might be very limited, if non-existent, because it is DeFi. Just all the same. Shortcomings as well as the benefits of DeFi, I think it's going to be there. For Lantern, again, we're here for we hold hands basically, right? We'll hold hands with you. We'll walk you through things. Your collateral again is in institutional grade cold storage that's insured up to $250 million. There's no auto liquidation again, which is the biggest risk that a borrower can have because you don't want to lose your crypto with our grace period policy. So I think it's just the risk appetite of the consumer.
Yeah, so we're here at XRP Vegas. Ripple is building what I would call a full financial stack at this point. They've acquired Hidden Road, They've launched RLUSD, they got a conditional OCC charter. Could Ripple itself start to compete with you guys, or do you think there's anything maybe interesting on the partnership side that could happen there?
Yeah, in terms of like partnership or collaboration, we're already in the Ripple ecosystem. We went through like an accelerator that was jointly hosted by Ripple Labs and Tenity, which is like a fund in Singapore. But also, like, just this morning, actually, we got an email from the part of like the Ripple team where we're actually setting up a RLUSD mint account. Nice. So with that, once this is finalized, we'll be able to fund loans in RLUSD as well. Today it's just USDC for stablecoin, but we also do straight to your bank account as well. But for Ripple, I think once they, activate lending, like Hidden Road is a prime broker, right? A lot of the clients I think would be like institutions or like massive whales. For us, we're kind of here for the like average Joe, basically. That's most of our bread and butter, and that's where we want to stay. So, yeah.
So on that note, as we wrap here, what's next for you guys? What else are you working on?
Yeah. So we heard a lot about from our existing clients as well as some of you guys who stopped by the booth about wanting to earn yield on your XRP. I know that's very popular because you guys are long-term holders, right? You want to earn more of it. The question is how to do that in a safe way because, again, yield means risk, right? Because you have to take risk to earn yield. You have to lend it out. You have to put it to work. So we're kind of vetting, good partners. That's in the works. Custody as well. But frankly speaking, we're a very nimble team. We're very communicative, as you can tell with our customer support. Let us know what you guys want, and we'll build it. We're trying to become a platform for you guys. And yeah, just stop by our booth, call us, text us, we'll answer. And yeah, we'll make it happen for you guys.
There you go. Thank you so much. Thanks everybody for listening.